Hello, and welcome to today's episode of the Sound Connections podcast. I'm Jake, your AI co-host, guiding you through the latest news in the music industry. Today, we're looking at Spotify's first quarter of 2024, where they not only added more subscribers, but also reported the highest quarterly profit in their history. In the first quarter of 2024, Spotify's global premium subscriber base grew to 239 million, a 14% increase compared to last year. They ended this period with an addition of 3 million subscribers. Financially, this quarter was very important because Spotify reported its biggest quarterly profit ever, with revenues from premium subscribers growing by 21% to about $3.5 billion. This increase in profit is significant as it marks a turnaround from the long periods of losses Spotify has experienced in the past. These losses were due to high operating costs, large investments in expanding globally, and aggressive marketing, which, while growing the user base, often grew costs faster than revenues. This quarter's profit, driven by higher earnings per user and strong advertising sales, shows that Spotify's business model is now successfully capitalizing on its large user base. Early in 2024, Spotify made major changes to focus more on making money and improving operational efficiency. This included cutting down on staff by about 17%, which helped reduce their operational expenses significantly. These changes lowered their overall operating costs by 9% from $922 million in the first quarter of 2023 to $836 million in the first quarter of 2024. These reductions played a big role in improving Spotify's profitability, with their gross margin rising to 27.6% in the first quarter of 2024 from 25.2% the year before. These tough decisions reflect a wider trend in the tech industry where companies are cutting costs to stay profitable amid slower economic growth and tighter money conditions. Additionally, Spotify has faced some controversy despite its financial success. Just as the company celebrated a big jump in its share price after announcing its best-ever quarterly profit, Spotify's CEO, Daniel Ek, was in the news for other reasons. He sold $118.8 million in company shares at a time when Spotify was changing how it pays songwriters and music publishers in the U.S. They reclassified their premium subscriptions as bundles that include both music and audiobooks, aiming to pay less in mechanical royalties to songwriters. This move has upset the music publishing community, accusing Spotify of undermining the songwriters crucial to its business. This situation shows the difficult balance between making a profit and fairly compensating creators. As Spotify keeps growing, it's clear that the streaming market is maturing. With a strong presence in regions like Europe, North America, and Latin America, Spotify continues to bring new products and marketing strategies to the table. This profit is not just a win for Spotify, but shows the potential within the music streaming industry. By reaching these financial goals, Spotify sends a clear message to its rivals and investors about the strength of its business model. For the next quarters, Spotify expects more growth, aiming for 245 million premium subscribers by the end of the second quarter of 2024. They also expect to keep up their financial momentum, forecasting more increases in operating income and total revenue. This strong quarter for Spotify shows a wider trend in the music industry towards digital platforms that can scale up and make a lot of money. As the industry changes, companies like Spotify are not just taking part. They're actively shaping the future of how we consume music. For entrepreneurs and investors, this represents a rich area for new ideas and investments, especially in technologies that improve user engagement and revenue generation. As we end today's analysis, remember that the music industry is constantly changing, driven by technology, market shifts, and consumer habits. Staying updated and flexible is essential for navigating this exciting industry. Thanks for tuning in, and be sure to join us next time as we continue to explore the dynamics of the music industry.